Hey there, crypto traders. Are you feeling a bit shaken up by Bitcoin's recent roller coaster ride? Are you wondering if the correction is finally over or if there's more turbulence ahead? Many traders feel unsure about Bitcoin's recent fall below its all time high and below that crucial 69,000 mark. But don't worry, in this video, we're going to help you understand what's going on so you may have a solid trading plan. I'm Deron Wagner, and I've been trading for more than 25 years. In this video, I'm going to show you how to look at Bitcoin's price action using multiple time frames, and we'll examine both the big picture and the current trend to help you understand where Bitcoin may be headed next. In this video, you'll discover the key price levels to watch on different time frames, known as support and resistance levels, and how to use simple tools like trend lines and moving averages to make smart trading choices. And we'll also tell you why having a clear trading plan and sticking to it is so important. By the end of this video, you'll have the knowledge and tools to approach Bitcoin's next move with confidence. But that's not all. At the end of the video, I'll also share my special analysis on Ethereum and my thoughts on other crypto altcoins. This extra information is going to help you better understand the entire crypto market, not just Bitcoin. It doesn't matter if you're new or experienced crypto trader, this video is an absolute must-watch to power up your crypto trading. Hit that like button, subscribe to our channel, and let's dive into the exciting world of swing trading Bitcoin together. When analyzing the charts of any asset, the Morpheus strategy focuses on a concept known as multiple time frame analysis. This means that we don't look at the chart of just one time frame. Rather, we look at multiple time frames because each chart will give a different picture of what's happening. For example, what you see right here is on the left side, we've got the weekly chart of Bitcoin, and this is good for the big picture trend. The big picture removes some of the noise of the shorter term charts and shows you what's really happening in the longer term. Then we've got the daily time frame. The daily chart is what most traders typically use, especially if they're new. And the daily time frame is great because a lot of people follow it. But this is really what we use for primarily defining our trade setup. So once we've used the weekly chart to identify the big picture trend, we then zoom into the daily chart to look for actual trade setup details, our specific entry point, our specific exit point. Because remember, the MTG strategy is a rule-based trading system. We don't just wing it when we're going to buy and sell. We have specific rules that we teach our members of the MTGtribe. And finally, we've got the 4-hour chart. Now, the 4-hour chart, this is a short-term time frame for our style of swing trading. This is about as low as we go in terms of looking for entries and exits. But once we've identified the setup on the daily chart, we then zoom in even further to the 4-hour chart, and that's where we can really hone and fine-tune our entry and exit points for the setup. So you could call this a top-down analysis. We start at the top with the bigger picture, and then we work our way all the way on down. So with Bitcoin today, what I'd like to do is the same thing with you, is I would like to walk through our multiple time frame analysis of Bitcoin, starting with the weekly chart and drilling down so we can see where Bitcoin may be headed in the near term. So as I mentioned, let's go ahead and start with the weekly chart. All right, so this is our weekly chart of Bitcoin, and this is going back to 2020. So we're going back about 4 years on this chart. And the most notable thing that you want to see here is the prior all-time high, which was set back in November of 2021, right on almost 69,000 exactly on most platforms. And this is an important number to keep an eye on because this number has come into play over the past couple of weeks. And if we go ahead and scroll to the right here, we can see that 3 weeks ago, we first tested that 69,000 mark with a big green candle after several up candles. And then 2 weeks ago, we actually probed all the way above that 69,000, broke out all the way up to a high of just shy of 74,000. Now that price action of the failed breakout to an all-time high initially caused a candlestick pattern to form on a weekly chart known as a doji star. Basically indicates indecision. Notice the long wicks above and below the body of the candle, which means there was kind of a tug of war here. And then last week we had the big correction, which actually noticed that it held above the 8-week moving average. That's key. This green line here is the 8-week moving average. And notice how since October, since this current rally in Bitcoin began, notice how that 8-week moving average has acted firmly as support. Back in January, we had one dip below that where we formed a bullish hammer candlestick. It's a reversal pattern. So we dipped below that 8-week moving average during the week, but closed the week above it. And so that's what we call an undercut. When we get the price that dips below a key moving average and snaps back above it very quickly within 1 or 2 bars, bars, that's called an undercut, and that's a bullish pattern. And you can see the reason this is bullish is because it absorbs overhead supply by washing out stops of people that have their stop set just below the 8-week moving average. So you can use that to your advantage when you know that that's actually beneficial when stops get wiped out, because it doesn't require as much volume for the prices to move back up again. And after we had that reversal back in January, since then, Bitcoin's been marching straight up. And even with last week's reversal, we formed a similar bullish reversal candle, the hammer pattern, but we didn't even dip below the 8-week moving average. So although last week's correction all the way down to 60,000 may have seemed pretty extreme, when you look at the big picture chart of the weekly chart, you can see that we held above the 8-week moving average. So on the big picture trend, everything looks very healthy. And most importantly, what we wanted to see here is Bitcoin needed to get back above that 69,000 breakout level pretty quickly, because if we fall back below that 69,000 mark and don't get back above it within 1 or 2 bars, then you run the risk of people that bought that breakout being trapped and they sell, and it causes further selling pressure. So failed breakouts can be very dangerous if they don't recover quickly. But in this case, we saw Bitcoin snap back above that 69,000 mark, and you can see currently trading just shy of the 70,000 level. So that's a really good sign. That 69,000 mark should now act as support. Remember that a prior resistance level becomes the new support after the resistance is broken. So now let's go ahead and drill down and look at the shorter term daily time frame. Now, looking at the shorter term daily chart, notice how the picture looks very different. Whereas on the weekly chart, all we saw was a bullish reversal bar off the 8-week moving average. On the daily chart, it looks a lot choppier, right? That correction, in fact, was quite volatile. We had some big down days, then big up days, and a lot of whipsaw action. So when you see this type of action on the daily chart, it's often very helpful to zoom out. We always tell our members of the MTGtribe that if the price action looks choppy, zoom out. And that's how you can see the big picture and remove some of the noise of the shorter term charts. Now, as we mentioned, Bitcoin has been following the 8-week moving average, but on the daily time frame, it's also been following the 8-day moving average, which is this green line. Since February, when we had a breakout in February, price action has held, and just again, a few undercuts, brief dips below the 8-day moving average. But for the most part, the 8-day has held firmly as support. Now, in a strong, healthy uptrend, if the 8-day moving average does not act as support, then the 20-day EMA just below that, which is our blue line, will often serve as support. But since the beginning of February until last week, we didn't even have a touch of the 20-day EMA because of the momentum has been quite strong. Now, when Bitcoin started to pull back and when traders noticed that the price could not hold above the 8-day EMA, notice how quickly the price action dropped down to the 20-day EMA. And notice we had a bit of higher volume selling too, which is, normally that's bearish, but a bit of higher volume selling along the way is normal, especially when you see a pullback like this. After that pullback to the 20-day EMA, you can see that the price action in Bitcoin was rather choppy. And in fact, several days later, it had a huge dip below the 20-day EMA, washing all the way down to the prior breakout level, which you can see here. But that level held firmly. And now we see that the price action started to stabilize right after that big volatile move. Price action held the low. That's key right there. And if we draw a horizontal line, notice that last week's low actually lined up with the low of the prior breakout from this bull flag, this pennant that we had here. And that's key because the prior resistance level is now acting as support, which is what we want to see. So we've established now a firm base of support, intermediate term, just above the 60,000 mark. And notice the 50-day moving average here is rising. And notice how that 50-day MA is almost converging with the swing low from last week. And when you see that type of convergence, we call it confluence. That makes the support level all the more important, because when you've got not one, but 2 or 3 different technical indicators all lining up at the same price point, then that support or resistance becomes all the more significant. So that's a good thing that we see that this 50-day MA rising up, and it will soon meet the price here. So we can see that's kind of our line in the sand now, just below the 61K mark. And that's if you were looking at more of a position trade where you wanted to hold through the next pullbacks in anticipation of the next move up, then you could look at setting your stops below this 50-day MA and this prior low. We wouldn't want to be in if we dip back below that. But if you're a little bit shorter term, then I'm going to drill down to show you some other moving averages you can look at if you want to play a little bit tighter. Now let's look at the past couple of days of price action in Bitcoin. After we had that volatile price action, when a bottom starts to form, once in a while you get kind of a V-shaped reversal where the price is kind of dip down and then rip back up. But more often than not, what you get is a bounce off the lows, and then you get a bit of a tightening of the price action and the volatility. above those lows. And that's what we had here for several days. Notice how the price action held. It was actually stuck just below resistance of both the 8 and 20-day EMAs for several days there. And then just a few days ago, we popped back above that level, which put us back above the 69,000 mark. Okay, so this pink horizontal line I've drawn, that's the prior breakout level at the 69,000 points. So that's what we want to see as support right now. We want to see that hold. And once we broke out above that 69,000 mark a couple of days ago, notice that the price action has been in a tight sideways consolidation near the highs. Now that's constructive. That's bullish price action because we want to see lighter volume. We notice we've had lighter volume during the consolidation. But what we do want to see, though, is if the price breaks out and tries to head out higher, we need to see this volume pick up. One thing that we would have liked to have seen better on this chart is a couple of days ago when we recovered back above the moving averages and back above the 69K mark, the volume remained below average. And that's okay for now, but we want to see that pick up if there is further buying pressure from here. And most importantly, we want to avoid higher volume selling. Now, we could get a dip, another undercut below the 69,000 mark here, but the rising 8 and 20-day EMAs should act as support to catch it. So if you're already long Bitcoin, you could look at trailing a stop below the 8 and 20-day EMAs here, because if we dip back below that, we could quickly see a move back down to test the prior low and the 50-day moving average. So you can have a relatively good risk reward even with an entry point here on a pullback to near the 69K mark. If you had a stop price, just several percent below that, you want to go about 5% below that, but not much more, so that you're out if the pattern fails. But as long as we hold up above the 69,000 mark, the price action is constructive. And now let's go ahead and zoom into the shorter term 4-hour chart and see what the chart has to say. Now, as we mentioned, the 4-hour time frame, we don't use that for scanning for setups. We don't use it to look for trade setups on the 4-hour. But once we've identified a potential trade setup, then we use the 4-hour time frame to hone our entries and exits to give us more precision entry and exit points with a higher risk reward and potentially a lower risk buy point. And here's where it gets interesting. Now, we recently entered Bitcoin in the Morpheus crypto chat room, and I wanted to show you our entry points that we used. As we mentioned, we've got this downtrend line converging with the 50-day MA, but we also had another downtrend line that had formed at the time, and that was this first downtrend line here. And once we broke out above that, then another downtrend line developed at this 50-day MA. So after we saw this bottom form, we waited for a higher low to develop right here on the 24th. Remember, when we're in a pullback mode, we're generally not buying as the price is still pulling back. Rather, we wait for the signs of short-term bottom to form, and then we look to buy strength when we actually get a bottom and we buy a higher low or break out above a downtrend line. So we're not looking to try to get the lowest price on a pullback. Rather, we're trying to get a lower risk entry point with a high risk reward. So by paying a little bit higher price, you actually get a lower risk entry point. So our initial entry into Bitcoin was after we formed this higher low, we bought a half position when the price broke out above the 65,000 mark after it formed a higher low and got back above this 20 EMA on the 4-hour. And then we said we were going to add to the position once we got confirmation of a breakout above the 50 MA on the 4-hour, which was converging with this downtrend line. And that's where we added to the position. So this gave us a nice average price below the 66,000 mark, which means that we now have a nice solid gain. Even if we can get a pullback, we've got a nice entry point with relatively low risk. Now, we're going to be trailing the stop higher as the price action moves along. But right now, what we see here over the past couple of days is this is healthy short-term consolidation. Be on guard, though. If the volume starts to pick up and we dip lower, that's a negative sign. We could stall. For now, Bitcoin's kind of in no man's land if you're not already in, though. If you're not already in it right now, I would either wait for a pullback to, closer to this 68,000 mark, perhaps a dip down to the 20-day EMA, or potentially a breakout above this consolidation that's forming. Ideally, we'd like to see another week or so of consolidation at the highs here, because when we have a breakout, the more that the price has built a prior base of consolidation first, the higher the odds that the breakout will stick. So a basic consolidation here is much better than if the price just goes straight up. So it requires a bit more patience, but it's actually better in the end for our trading results. So right now, no action taken on Bitcoin. We're just holding the position from our entry off the lows. But again, if you're not yet in, you can look for a potential pullback down here to between the 68 and 69 mark. We want to see that 69,000 mark hold, but a little dip below that could give you a relatively low risk entry point. Now, if you grab that entry around here on a pullback, I would keep a stop not much below this 50 period MA, because notice how I'm going to remove these trend lines. I want to show you, this is kind of interesting here. When we remove these trend lines, I want to show you just how well this 50 period MA on the 4-hour chart acts as an indicator of support and resistance. Notice how before the correction began that this 50 MA acted as a pivot for support. And even after we broke out in late February, that big dip that we had on March 5th, notice we just undercut the 50 MA and snapped right back above it. And then we had several days where we dipped below and held above it. And you can see how important this level is, because when we had the big sell-off on the 14th, the break of that 50 MA is what reversed the momentum of the short-term trend. So once we broke below that 50 MA support, that now became resistance. And also in the chat room, I remember when we broke below this, we said, okay, look out, because now that's going to act as resistance. And it's exactly what happened. We got to bounce into that level. Notice how we probed above it and stalled, and that acted as a selling point and dipped down, dipped down. Here, first test back above the 50 MA, we couldn't do it. Another test, we couldn't do it. And after 3 tests above at the 50 MA, we finally broke out above that level. So you notice how when you zoom in here and you kind of scroll the chart, it becomes very clear that that red line was acting as support, then it became resistance, and now it's back to support again. So you can kind of use that as a rough guide for our time frame of swing trading as an indicator of support or resistance. So zooming back out to the weekly chart, overall, Bitcoin looking really solid as long as it holds above this 69,000 mark, and especially if we get above the highs of 2 weeks ago to new all-time high territory. When we're at new all-time highs, we call that blue sky territory, because what resistance is caused by is people that bought at a higher price that look to sell just to break even when the price rallies back. And that's overhead supply that becomes resistance. But when you're at a new all-time high, there is no overhead supply. So it doesn't require as much volume for prices to continue moving higher at that point. So this is looking really solid as long as we hold above this level. You could also, if you wanted to take a little bit longer term stance, you could use this 8-week moving average as a guide for your support as well. Now, just like we don't try to guess where a pullback will end, we don't guess the bottom, we wait for support to form. It's the same on the upside too, in terms of taking profits, especially when you're at a new all-time high. You can leave a lot of profit on the table if you just try to guess where the trend will end, because trends can often last much longer than you realize. So we use what we call a trailing stop strategy, where as the price moves higher, each time it pulls back and sets a swing low, we raise our stop along the way to maximize profits until the price action turns bearish. And that's where we look to get out and sell into strength. Now, as promised, let's go ahead and take a quick look at Ethereum as well. Ethereum is the queen of crypto, and Ethereum is important because it's a benchmark that shows the overall health of the altcoin market. If Ethereum is strong, typically the altcoin market is strong as well. And if Ethereum is weak, very rarely will you see a lot of strength in the altcoin market unless we're in a transitional stage of the cycle. But let's go ahead and do the same kind of quick top-down analysis with Ethereum. And we see that it's a different picture than Bitcoin. Whereas Bitcoin is at a new all-time high, Ethereum is still well below its all-time high. So it's got some bullish momentum, but you can see here actually a bit of horizontal resistance from back in March of 2022, right at the 3,500 mark. And that's kind of become our pivot here right now. That 35 to 36 level is important. But just like Bitcoin, even though it's not at a new all-time high, the 8-week moving average has been holding firmly as support. And even with last week's correction, Bitcoin was a 14% correction off the highs. Ethereum was a 25% correction off the highs, which that's typically normal. Ethereum typically is more volatile in both directions. So it was a steep correction, but despite how steep the correction was, notice that we still held well above the 20-week EMA and just undercut the 8-week EMA. Now, if we zoom into the daily chart of Ethereum, we can see it's a similar pattern in that we had a steep correction over the past few weeks, but the correction was actually stronger, more vicious, I should say, than Bitcoin. We corrected all the way down to the 50-day moving average, whereas Bitcoin held well above its 50-day MA. Ethereum went all the way down to its 50-day MA, but again, 50 MA doing its thing on all time frames, and the 50-day MA acted firmly as support. Buyers stepped in on that first test of the 50-day MA, big volume on the reversal. And again, after several days of chopping around, then we finally pop back above that convergence. But there is more overhead resistance with Ethereum. It's going to take considerable amount of momentum and volume to get back up to the highs, whereas Bitcoin is closer to its all-time highs. And if we zoom into the 4-hour chart, we can see that it's important that Ethereum holds its current level. We wouldn't want to see it dip back below this 50 MA, which is currently around the 3440 level. Just like Bitcoin, notice how that 50 MA on the 4-hour chart was acting firmly as support. and then it became resistance, and now it should be acting as support again. If we look at the altcoin market, we have seen that there's some rotation that shifted in leadership, but most of the top altcoins right now have a similar pattern to Ethereum, kind of in no man's land. They bounced off their lows, but kind of in no man's land where there's no trade setup. You'd either want to buy a breakout from a basic consolidation or a pullback after the breakout's already occurred. So we're focusing right now on altcoins at new all-time highs or new 52-week highs, such as FET. We bought FET in the chat room. It just broke out to a new all-time high. We bought it last week, so we're showing over a 20% gain on that one now. And we've got some other hot altcoins we're looking at. But for the most part right now, the focus is on Bitcoin. And as we start to see Bitcoin take a rest, and we may start to see rotation back into the altcoin market. And right now, if you're looking at altcoins, the AI sector is where it's at. That's where all the top altcoins are right now, is in the AI sector. So you've got FET, AGIX, RNDR, and GRT, and more. So that's the altcoins on our radar right now. We'd like to hear what altcoins you're looking at. Go ahead and drop a comment below and let us know what's on your radar for the next potential bull run. As we wrap up here, be sure to check out these 2 videos that appear on your screen. We've handpicked them for you so that you can get some more great information about our swing trading strategy. And if you're new to MTG and you'd like to not miss out on any more of those awesome trades we told you about earlier, head on over to morpheustrading.com and click on Crypto Picks, and we'll get you started. We hope you enjoyed this video, and we'll see you back here in the next MTG Crypto video.